stocks in Asia traded lower Monday morning following significantly weaker than expected Chinese trade data released over the weekend. The mainland Chinese markets, closely watched as a result of the trade war between Beijing and Washington, slipped in early trade. The Shanghai Composite declined by 0.44%, while the Shenzhen Composite shed 0.75%. Meanwhile, Hong Kong's Hang Seng Index traded down by about 1.4% as Hong Kong-listed shares of China Construction Bank fell 1.23%. Chinese November trade data dwindles. China reported notably weaker than expected November exports and imports, which pointed to slower global and domestic demand and raised the possibility that Beijing may undertake more measures to boost growth. November exports rose 5.4% from a year earlier, according to Chinese customs data on Saturday, which was below the 10% jump predicted by a Reuters poll. That number was also the weakest performance since a 3% contraction in March. The customs data showed that annual growth for exports to all of China's major partners slowed significantly. Import growth was 3%, the slowest since October 2016, and a fraction of the 14.5% expected in the Reuters poll. Imports of iron ore fell for a second time, reflecting waning restocking demand at steel mills as profit margins narrow. China's November trade data missed expectations by a hefty margin, said analysts from the Commonwealth Bank of Australia in a morning note. Softer export growth reflects slower global growth and the fading effect of U.S. importers front-loading shipments to avoid increases in tariffs. Falling import growth points to softening domestic demand. But we expect Chinese fiscal stimulus to support imports in 2019, they said. Rest of Asia mostly declines elsewhere in the region. Japan's Nikkei 225 fell 1.86% in morning trade, while the Topix index dropped 1.72%. Shares of Japan Display plunged 10.61% in the morning after the company earlier said it had no plans to cut production of its smartphone panels in December, following reports that it was planning to do so. Electronics firm Pioneer plummeted 28.41% on the back of its acquisition by Baring Private Equity Asia. Meanwhile, South Korea's Kospi also slipped around 1%, with shares of chipmaker SK Hynix dropping 2.4%. Over in Australia, the ASX 200 fell 1.9% in afternoon trade, with almost all sectors seeing losses. The financial sub-index Down Under fell 2.43% as shares of Australia's so-called Big Four banks declined. Australia and New Zealand Banking Group dropped more than 3%, and Commonwealth Bank of Australia fell 2.6%. Westpac slipped 3%, and National Australia Bank was down 2.4%. Geopolitical issues once again look set to influence markets this week, when traditionally traders expect to slow down as we head into Christmas market trading conditions, said Rakuten Securities Australia in a note. Sentiment is once again expected to dominate direction as we move through today's trading sessions, and traders will be keeping a close eye on news wires for any changes in the current situation on a variety of issues, they said. Simple name price change % change Nikkei HSI ASX 200 Shanghai Kospi CNBC 100 China lodges strong protests to Huawei CFO arrest China summoned the U.S. ambassador to Beijing, Terry Branstad, on Sunday to dispute the arrest of Chinese electronics giant Huawei's chief financial officer, Meng Wanzhou. The official Xinhua news agency said Vice Foreign Minister Liu Sheng lodged solemn representations and strong protests with Branstad over Meng's arrest. She is reportedly suspected of trying to evade U.S. trade curbs on Iran, and was detained on December 1 in Vancouver, Canada. On Saturday, Canadian Ambassador John McCallum was also summoned over Meng's detention and warned of grave consequences if the Huawei executive was not released. Huawei is one of the largest mobile phone makers in the world, and the company has come under pressure from Washington. It faces a restriction on selling telecoms equipment in the U.S. due to what American officials describe as national security concerns. Beyond potentially influencing the technology space, the arrest may also have implications for the ongoing U.S.-China trade war. Hard deadline on U.S.-China trade war pause. U.S. Trade Representative Robert Lighthizer told CBS in an interview on Sunday that the end of the 90-day pause in tariff escalation between Washington and Beijing in their trade war is a hard deadline. As far as I am concerned, it is a hard deadline. "When I talk to the President of the United States, he is not talking about going beyond March," he said on the CBS show Face the Nation, referring to President Donald Trump's decision to delay tariffs imposition until March 1 while talks proceed. At the G20 summit in Argentina, Trump and Chinese President Xi Jinping struck an agreement to delay imposing additional tariffs on each other's goods for 90 days. Currencies. The US dollar index, which tracks the greenback against the basket of its peers, was at 96.410 after touching highs around the 97.2 handle last week. Meanwhile, the euro saw gains against the dollar, trading 0.52% higher at $1.1435. The Japanese yen, widely viewed as a safe haven currency, traded at 112.31 after seeing lows around 113.8 last week. The Australian dollar was at $0.7216 after touching highs around $0.739 in the previous week. Reuters contributed to this report.